And joining me now with his analysis on the current market developments at midday is Martin Smith from Anchor Capital. Martin, thanks so much for your time this afternoon. Now, yesterday, I started the market section by saying that the sell-off we saw is starting to fizzle out, but things seem to have changed. Markets back in the red following, the 104% tariff being slapped to China. What have you just made of trade of late? It really does seem like volatility continues to be the name of the game.
Yeah, I mean, you're talking about changing from one day to the next. It's almost changing from 1 hour to the next. I mean, it's some absolutely insane moves. Even in the US yesterday, up 2.5 at the open, down about 1.5 to a few hours later. So I think it really, really is seesawing around. I don't think anyone knows what's going on. And I think everyone is feeling a little bit panicky. So I think until we get a bit more clarity around what happens with tariffs, or we get to a point where valuations in the US start to look really cheap, I think we're going to start to see this, or we're going to continue to see this volatility play out. So it's anyone's guess where the bottom is. But yeah, until we get a bit more clarity and a bit more information, I think this is going to be the name of the game for the days and weeks that follow.
And I mean, you can even see it playing out when you look at the US futures. In the morning, they were all in the red. Now you can see the NASDAQ futures are in the green. It's really, tough to, navigate and position yourself in markets right now.
Yeah, absolutely. But I think you've got to go back to just ultimately valuation and picking long-term stocks for 3, 4, 5 years. And I think now you're getting the opportunity to buy some very good stocks that you want in your portfolio over a longer term kind of basis, and maybe just close your eyes and buy some. You might miss another 5 or 10 on the down, but this might be the bottom. So again, it's anyone's guess, but all we do know is that stocks are looking cheaper, and that does give you the opportunity to pick out some quality stocks that probably haven't been cheap for the better part of 2 years.
Attention's also shifting to those Fed minutes out later today. Martin, what are your expectations on that front, considering that we've had these growth fears, and the Fed in their March meeting already lowered their growth expectations as well for 2025?
Yeah, absolutely. So, I mean, we had that meeting when it was at that kind of 19th of March, off the top of my head. And they do have that conference afterwards where they do speak about things a bit more openly. But again, that's all before the tariffs. So we do have a lot of information, but we don't have information post the tariffs. So I think, like I mentioned a few minutes ago, I think the market is just looking for any bit of information, any bit of direction to kind of feel where we're going next. And I think they'll be looking to these minutes very, very carefully for just, again, like you mentioned, any news around growth, anything like that, to kind of see where to position themselves. And obviously, we've got quarterly earnings coming out on Friday. So, I mean, there's a lot of moving parts, which I think, again, feeds into that nervousness and volatility.
And talking about earnings here at home, we have numbers out from the Purple Group. Revenue up close to 26%, HEPS tripling, and they've said, or rather they've pointed to gains from the Easy Group, which is the group that houses Easy Equities. What have you made of those numbers?
Yeah, very, very good set of numbers. A very good business, obviously a market leader in that space. Easy Equities is everywhere, and I think, very, very good across the board. Revenue, HEPS, kind of everywhere you look, it's just all very, very positive. And I think they are benefiting a lot from more market penetration, more interest in the markets, more volatility, more buying, selling. And a lot of people, I think, are starting to look at this kind of where we are in the market, both locally and offshore, as kind of opportunity. I think it's maybe 5 to 10% lower on the offshore markets. I think it's then starting to screen as nice and cheap. We're not really at the cheap levels yet, but I think Easy Equities will benefit from people starting to look towards opportunities that are presenting themselves in the market now on a more medium to long-term basis.
Now, Martin, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
The rand has weakened a lot, so I almost picked a local stock, but I thought, let me pick an offshore stock that has fallen quite a bit. ASML, I think it's one that a lot of people on the show have chosen before. It's the first time that I'm choosing it. And it's a Dutch company, and they make extreme UV etching equipment. Basically, that it's the machines that manufacture semiconductor chips. And the key here is they are a monopoly. There's no other company that has the technology that they have. So if you really want to make the most advanced chips at 3 microns, which is extremely small, you need a machine made by ASML.
Yeah.
So it doesn't matter if there are tariffs. The whole thing about tariffs is it changes people's choices. You would decide to rather have a local manufacturer than an imported product, for instance. But in the case of a monopoly, like ASML, you have no choice. There's only one supplier. So tariffs are not really going to impact them substantially. At the same time, you have another, not quite cold war, but we're getting very close to it. And it is a war based on technology, based on chips and development of these chips. So a lot of money is going to be spent by the US and by China, directly and indirectly, to get their hands on the type of machines that ASML makes. So I can foresee that their chips are going to, their machines are going to be in demand, and it might not be directly China that buys them, but maybe it's via Singapore or other countries in between, and ultimately the two big powers in the background will drive demand for ASML's machine.
Well, following on from what JP said about quality companies at low prices in uncertain environments, one quick way to do that is to look at a quality company and see how it's performing versus the current market turmoil. If it's outperforming and holding up, you know you're in a company that will, when things turn around and markets go up, will probably outperform as well. If it's outperforming already, one of those is local, it's Advtech, and the other reason I'm doing that is because I am at the moment very wary of any company, whether it be local or offshore, that is reliant on any kind of supply line from a country outside its local environment. ADH will not be affected by tariffs because it's, you know, it's everything is sourced locally. And I've picked it before, and one of the growth areas I really like is what's happening in the East African operations. So yeah, Advtech.
So Ricka's going with a defensive JSE player, Advtech, and JP going with a semiconductor player with that AI play, ASML. What have you made of those counters, Martin?
I like both of those stocks. I like both those counters. We hold both of them in our model portfolios, both locally and offshore. ASML, to the point I was making earlier, I think you're looking at these stocks that are down 10, 15, 20% for the year. And it's a good time to buy these stocks. Things like ASML kind of, again, on a more medium-term view, yes, market can maybe go down another 5 or 10 from here, especially offshore. But pick up these quality stocks that are looking a bit more attractive and that have very good growth prospects going forward and are looking a bit cheaper. On the Advtech side of things, we really like the education space. Look, I think the kind of SA macro backdrop hasn't helped, and you've seen a little bit of a sell-off, especially in something like a Curro, which is also something we like, probably a little cheaper than the Advtech stock, but we like both of those, and yeah, Advtech's a good one. I think a little bit more growth here than the Curro side of things, and again, to play a little bit of a bounce in the SA market from these levels, I think is also a good play.
Martin, where else are you seeing opportunity? What's your stock pick today?
Sorry, I sound like an absolute broken record here. The market's giving us opportunities on stocks that we've wanted to own but have been expensive over the last 1 or 2 or 3 years. One of those is Ferrari. I'm an absolute leader in the luxury space. And I think this pullback that we've seen in the last kind of month or two has really provided us with a nice entry point into a stock like that, something we've been wanting to own for quite a while. And I think now is the time to do it at a much better valuation. And again, let's see where the market goes on a short-term basis, but on a long-term basis, I think this will prove to be quite a nice buy at these levels.
Martin, thanks so much for your time and just taking us through trade at midday. That was Martin Smith from Anchor Capital.